This is Chicago's Morning Answer with Dan Proft and Amy Jacobson.
If you're looking for the latest news, insight into what it means, and the sharpest opinion, there's only one station in Chicago where you can turn, and it's this one. We're AM 560, The Answer.
Top of the morning, Dan and Amy. So much of the discussion about this agreement in principle over the debt ceiling melodrama has been focused on whether McCarthy can get all of the members of his House Republican caucus, or at least the overwhelming majority he needs. He only has a very small few-member margin of error here. Can he get the Freedom Caucus on board, essentially? Because, of course, it's not going to be it's not as much as we conservatives would like. It never was going to be as much as we would like, but is where he landed good enough? But the big guy has some problems from his left, too. A good case study in this, although Pramila Jayapal, the manager of the Socialist Spice Girls caucus in the House, is about as good a logician as the big guy, which is not a compliment. Here is what she said over the weekend on the Sunday Talkies about this framework for a deal.
It is all because Republicans said that they wanted to cut the deficit. And let's be clear that what they got from this was not that. They may have gotten other things. I'm not happy with some of the things I'm hearing about, but they are not cutting the deficit and they are not cutting spending, because if you think about the fact that they've agreed to increase Pentagon spending, number one, they've agreed to increase VA spending, number two, and while there are some fiscal, calculations that are being made around what non-defense discretionary spending is, and by the way, for people that are listening to that, that's a lot of mumbo jumbo. That's basic spending on things like healthcare, education, childcare. All the things you care about is what Republicans want to cut. And they even took back $10 billion from the IRS that was supposed to go to taking on wealthy tax cheats in order to make regular Americans pay for wealthy people to be able to continue to get tax breaks. Mm-hmm. So I think that, you got to ask yourself, what was all the drama for? Because they didn't get what they said they wanted. We knew that was never actually what was on the table.
So just so I understand it, Representative Jayapal, you're criticizing the House Republicans for not getting the spending reductions that they wanted, but you opposed, right? They didn't get everything they wanted. They didn't reduce spending as much as they wanted, which is true, but that's their fault. So do you want to reduce spending or do you not? Well, and then in the next breath, she goes on to talk about all the spending that was reduced, even marginally, that she didn't want to see reduced. So you're criticizing them for attempting to reduce spending because you oppose any reduction in spending. In point of fact, you want to spend in the blank checkbook fashion that you have been spending, along with Mr. 10% in the White House over the last 2 years, right? I just love the criticism.
Real head scratcher. Yes.
They attempted to do something which I disagreed with, so I blocked it, and it's their fault. Right. Okay. For more on this, pleased to be joined by Jim Iuorio. He is a frequent contributor on, Fox Business. Also a restaurateur, of course, Branson Palatine, and now a podcaster.
Oh,
he's sort of horning in on our turf. The Future's Edge podcast, Jim Iuorio. Boy, just continue to pile up those hats, Jim. Thanks for joining us. Appreciate it.
Thank you for having me. I had to sit down after I heard the speech by the representative because it was just entirely too confusing. But I'm okay now, I think.
Sure?
Yeah, but I mean,
Take a deep breath.
But this is what you get. This is just what you get from the left. So this is what happens when you just emote and are incapable of thought. But anyway, your reaction in terms of what you think the market's reaction will be to what was proposed as a deal over the weekend.
So the market wanted it to be over, what the
course.
details of it, because we're never going to win. So the reason the market for all this time believed it was going to happen and there was going to be an agreement at the last minute where they ride in on the white horse and save us and then tell us for months how they saved us, is because the market didn't see a way for either party to let the whole thing collapse and effectively blame it on the other side. Each side would have been blamed if there was an economic fallout. They came to that realization. Market came to it earlier. Smart money always seems to come to it earlier, and that's why they knew this was going to be. They were going to come to an agreement. Whether or not it's a good agreement, there was never. We're in a situation now we can't even possibly have a good agreement. We've grown the national debt from $9 trillion at the beginning of the financial crisis to just south of $32 trillion now. We are on a path that, to call it unsustainable, is an undersell. And the only reason we're allowed to do this globally, to print so many dollars, borrow so much money, is because at this point in time, there's no real alternative to the dollar. As soon as there's any hint that there might be, this sort of behavior could be punished economically mightily.
Well, how do you think the markets are going to respond today?
Well, they're up. The futures markets are up a little bit, and that's just a little bit, and that's just like a mild relief. Like I said, they believed it was going to happen anyway, and now it's just confirmation, and that's what's on to the next thing. I think there is still the tiniest worry that when this actually comes to a vote, the fringe from the left and even some of the far right may try to block it. I don't think that's going to happen again because they will be blamed. It's a different world now where it's a little more difficult to pull the wool over people's eyes with things, and now good analysis done on social media when you don't have all the big major networks paid for.
So speaking of the markets, there was an interesting piece in the Journal over the weekend about trying to explain why they're so calm, why they seem to be so irrepressible in the face of fundamentals that suggest that that things are shaky, to say the least. Higher interest rates, less capital being invested, some banking problems. You would think those would be signals of slow growth, that arguments about a recession looming. And the Journal piece essentially suggests that the quant firms are stepping in where other investors have stepped back, and they're playing, and this is sustaining the S&P and the NASDAQ and those handful of firms that are really driving returns this year. Is that what's happening?
That's interesting, and I think it plays a part. But I think so I'm about to make a bull case for why the stock market has stayed bid and why it could remain being bid. That's not really economic fundamentals. This is that, remember, at the time the pandemic-related slowdown, they injected $6 trillion into the economy to spur growth. Okay, so in the last 10 months, they've been pulling that money back. M2 money supply growth is down 4.6%. It's the greatest amount it's ever contracted in history, but it's still up approximately, let's call it $2 trillion from where it would have been had we sustained the exact M2 growth path that was started in 2011. Does that you get what I'm saying? It's still, even though we've contracted.
I do, but
okay.
But I mean, since they're going in reverse now, you would think there would be market adjustments down accordingly. Since the sugar is being removed, the high would go away. And I guess you're saying, well, it did last year, and now this is stable or stable trending up. I'm saying that it may take a little while longer to feel the effects of a decreasing M2 money supply. And to put in perspective of what you just said, in our nation's history, there's only been 4 times that the M2 money supply has decreased more than 2%. 3 of those times were associated with depressions, and the other in 1893, which wasn't actually a depression, but it was a bank panic. So this is a big deal. All I'm saying is that you look and you say it's declined by 4.2%. Wow, that's amazing. We're going to go into a calamitous sort of environment right away. No, it may take some time because it's a mean reversion and because of what was on the other side of the coin, all that money injected. Well, it may take some time, or it may never come. Then, according to that line of argumentation, because Jay Powell may stop may stop raising rates and go back to quantitative easing of some sort.
Okay, but the general feel among analysts is that Jay Powell is not going to reverse course until there's burning timbers falling from the ceiling. It's going to be late because he's dug his heels in on inflation. However, the futures market, which is where all these trading firms place their bets essentially on what's going to happen. The futures market says that he is going to ease 200 basis points by the end of 2024. That's part of that whole inverted yield curve thing. And so the market is definitely telling us that a recession is coming because that's the only reason he would so quickly reverse and start lowering interest rates. And the market says that's going to happen starting around the end of this year.
So you're looking at not just a couple of more 25 basis point increases, but you're looking at increases from now until the fourth quarter?
No, I'm looking at the market now says one more increase at the June 14th meeting, and then the conversation will immediately start to switch to decreases by the end of the year. Because finally, so think about it this way, is that everybody knows that the efficacy of these rate hikes isn't felt till after a dramatic lag effect. Maybe it's 6 months, maybe it's 12 months. So I personally believe that the slowdown in inflation we've seen might not even be particularly related to the interest rate hikes. Remember, there's other reasons that inflation started to come off, too. High prices are somewhat of a cure for high prices. People just start to buy less. Also, the government stopped giving money directly into people's accounts like it did a couple of years ago, which to disastrous consequences, obviously. So I think those are the reasons that inflation is coming off. And right now, we're only starting to begin to feel the effects of the rate increases. I mean, think about housing. Like, if you guys own property, they increased the mortgage rates from 2.5% to 7% basically overnight. Not only did that affect first-time buyers adversely, but people who own houses aren't willing to trade away their 2.5% mortgage that they have. So it's affected the supply. So prices have not come down in the housing market like they wanted to. So it all takes a ton of time to work itself out. And we wanted it to happen right away. Jay Powell wanted it to happen right away. But sadly, that's just not the way it works.
And so if that's true, if there's just one, if that comes to pass, that there's just one more 25 basis point hike next month, and then we just stay at that level and we argue about what should come next, and Jay Powell and the mystics at the Fed ruminate in some faraway land about what comes next, then what do you expect the reaction to be? Essentially, you're suggesting that the market rallies and potentially the economy does as well, knowing that the worst is over.
So what I think is that the economy has to force the next step. So as far as asset prices, stocks, I think the market could trade relatively sideways. But I think that the economy could have difficult times in the next couple quarters. But it's fine. The Fed always gets it right. That's a joke. The Fed actually never gets it right, and this could have been so. The worst part about this could have been avoided so easily if in June of 2021, when CPI was already printing over 5%, they just kind of stopped helping. I'm doing the quotation marks for helping, and injecting, billions and billions of dollars into the economy each month for the next 8 months before they noticed that inflation wasn't transitory. So that basically, they always are going to overcorrect in one way or another just because of the bluntness and the lag effect of their main tool, which is moving rates around. And it doesn't happen. It is 2023. We expect everything to happen in 5 minutes, and it literally takes 8, 9, 10 months to start to feel these effects.
So to those investors who took a step back, are you recommending they take a step forward and wait to see and play until we see where things are at, over the next year?
Every time, my lawyers always tell me I don't recommend anything, but I will tell you what I am doing.
Okay,
I am in the market in the S&P 500, because technical analysis is something we do that the outside world thinks is voodoo, but it does show like psychology and momentum. If I see the S&P trade above 4250, which is getting close to that level right now, for this week, settle a few days above that, I will believe that there is a bull leg in, and that bull leg, leg higher in stocks. That could be them looking forward to a moment where the Fed starts to lower rates again, push in. This stock market rally has not been particularly healthy. When you look at 5 stocks that have carried the load the way that they have, more so than any time in my memory. And to me, that's almost a defensive play within the stock market. Like, go to these big techs that have good balance sheets and think that everyone else. So yeah, this is not a wonderful way it's been trading.
So then what?
A little higher than.
So then, what are you doing? Have you been doing the same thing? I mean, sticking with the Apples and the Googles and the Amazons, or are you buying the S&Ps, or what are you doing? Since you can tell us what you're doing.
If we get that trade above 42.50, we settle a couple days above that, I will believe that the bullish sentiment will spread from those tops, and then I will start buying the S&Ps. And cautiously. I don't think. I mean, you always got to live to fight another day in this stuff. But I will start to feel better about the stock market going higher. And again, I'm basically remember for 10 years I've been saying that the stock market's going higher because of how bad our government is and how loose and how much liquidity the Fed has to inject in the market to counterbalance bad economic policy. So it's this weird, like people look at the stock market going higher and think, oh, everything must be fine. There's been plenty of times where the stock market goes higher as an indication that things are not fine, and with a not fine economy means that the government has to create money and inject it, the Fed has to lower rates quickly, and that helps asset prices, if that makes any sort of paradoxical sense.
All right.
But again, if it hits that 42.50, you're going beyond FANG stocks. You're telling if this were you, you wouldn't be in Treasuries giving you 4%, you'd be back in play in equities.
No, I would just talk about the equity portion of that too. I think there's plenty of reason to be in Treasuries with other money as well too, and I think that that's a pretty good place to be too. But yes, to the other part of your point is exactly what I'm saying. I think that the rally could spread and be a little more shared equally than it is now if we get a little more strength.
You back in, Dan?
Okay.
All right. Before we let you go, I was wondering, of course, how your Bud Light sales were, especially over this busy Memorial Day weekend.
They're down. They're down pretty much.
Can you give it away?
People who are lifelong Bud Light drinkers. And again, the thing I will mention again is there's not a word. It's not any sort of grassroots movement. It's just a bunch of people who had the same beer loyalty for a long time going, I'll try a Coors Light. I've seen it over and over again. And the funny part is that the punishment of Bud Light is not going to be felt by Bud Light for several months because they sell to liquor stores and bars, and there's so many of these liquor stores and bars that are just noticing the last week or so that no one's buying Bud Light. So it's bad. I don't think that this is something that's going to be recovered from quickly.
What about when you go shopping with all of those moms and their activewear at Target? Have you noticed any drop off there?
Here's what there's a guy at Seeking Alpha who contacted me because they were writing a piece on this, and they knew the Bud Light is a little different in that it is an easy replaceable product. Nobody is romantic about Bud Light. People just drink Bud Light because it's what they drink. So it's an easy replaceable product. Target, now to alter people's actual their life. Like people go to Target. I don't even know necessarily for my wife, and we've talked about it a little bit. I don't know what she plans on doing, but there's not a really good alternative quite yet. I mean, I'm not going to go to Walmart. I'm sorry, I don't mean to bash any big Walmart shoppers, but it's not the same as Target. You know what I mean?
Yeah, no, I
don't go to either,
Walmart.
so I have no idea. All I know is I'm not giving up my Lululemon golf pants. So.
Really, you like them that much? Yeah.
Okay, but that underscores my point, right? Because it's something that would take a little bit more effort to move away from.
Yeah, exactly.
And Jim Iuorio,
you should have it in me.
You should grab. You golf, right, Jim?
I golf a little bit. I'm not as good as you guys.
Well, here's the deal. Because you texted me and offered, hey, there's some brand certificates I can contribute, to your golf outing. Just grab 3 friends and join us. It is June 22nd, right? Yeah, June 22nd. The proceeds go to the Tunnel to Towers Foundation. And guess what, Jim? Then you can have 25 one-minute commercials that air on our station. This is a win-win-win. You can have a good day of golf.
The hard sell.
Okay.
The hard sell.
It is. Jim. I don't mean to put you on the spot.
Hard sell on air. Right?
Yeah, on air. Yeah, we're not putting you on the spot, though. No big deal. You don't have to say yes.
No, just go to 560theanswer.com/golf.
Yeah.
Okay, and sign up.
Yeah. Okay.
I'm sure he appreciates that. Jim Iuorio, proprietor of Brands, Fox Business regular, host of the Future's Edge podcast. Jim, thanks as always.
Thank you, guys.
Thanks. We'll see you June 22nd. And he joined us on our turnkey.pro answer line.
The more you listen, the more you'll know. This is Chicago's Morning Answer. Morning Answer on AM 560. The Answer.
Balance of Nature's fruits and vegetables in a capsule.